Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the gold market. Gold shows absolutely unbelievable action. Even targets that we thought hardly will be reached within the week in around 2178, 2180 has been completed. So market actually in the moment has reached 2190 area. As I have promised in today's report, we have considered a few specific driving factors for the gold that were not widely discussed in the media. So if you have checked for the headlines, hardly you will get some information about that. And only some events have happened that with some proper analysis could let you to get these factors on the surface and to understand what's really going on. Because on the back of the different discussing of the Fed policy, whether it will be dovish or whether it will not be dovish, on the back of this stands big political event that is actually the core, the primary source of the driving power for the gold. All the stories about the Fed policy is already the consequence. So is the product of these events that have happened, and they are long-lasting effects. They are still just starting to act, as in general global world is coming to big events, is on the way to them, but not in the point yet. But gold, as you can see, already shows really significant action. From this standpoint, of course, we're really happy that our long-term strategy with the accumulating of the gold shows great behavior, and we hope that it still will be working for a few years more. And there is no problems for those who are just accumulating physical gold, as we have suggested. So you're gradually buying, keeping it to preserve your wealth. This is a great solution by our view. And currently, with investing in the gold, we can't find any flows. So everything stands, well, near perfect. But at the same time, so unprecedented action brings real problems for the day-by-day trading, because market is just creeping with the overbought and do not let to step in without significant risk. Every time when you see market at overbought, but you're thinking about taking long position, you're scaring that you could get great significant pullback, which is will be really costly, and that makes you to stay aside and wait for moderate reaction, moderate downside pullback. So in the current situation, common sense and technical analysis tells that it would be better to wait when a moderate pullback will happen. And actually, this is my choice. But this is kind of the moment where the personality comes on stage. And in the current situation, every trader has to make the personal decision whether it would like to jump in despite the overbought, taking significant risk, but getting some chance that it will keep going higher with the market if gold will continue this action, or you will be stably waiting for pullback, for retracement, and possibly you will keep watching for gold and seeing higher and higher action. So what is more comfortable for you psychologically is choices are up to you. So my preferable choice is the second way. So I'm a conservative trader and I prefer to wait when the pullback. Besides, my experience tells that if even you're jumping and moving with the market slightly higher, then moderate pullback in most cases gives you better entry, despite that market could keep going higher after your entry at overbought. Not always, but very often this happens. Now let's take a look where we're standing the gold right now. First of all, we have to acknowledge that market has completed a very important target on the weekly chart. Today we also will take a look at the weekly chart because it's important. Here's where we stand. A market right now at 1.7 extension of the butterfly has been formed on the weekly chart, and it also stands at a deeply overbought also on the weekly chart. In the current circumstances, all technical tools stands in favor of the pullback and actually forbid us to take the new long position. This is first moment. Yes, we have strong action. We have bullish trend. We know that commodities reacting on the overbought differently compared to financial markets. They could resist longer and stronger to the overbought. All these things we know, but at the same time, technical analysis gives the clear and common sense gives clear conclusion that in the current point it would be better to wait for a pullback before market will continue up projection to the upper border of this channel and next target of the butterfly around 2250. Another moment that I would like to discuss is the all-time COP target on the gold market. It has happened so that our local COP with the head and shoulders pattern that we're trading on the monthly chart, it's actually this shoulder head, and we have this A, B, C bottom with the OP high about 2290. Its COP stands at the same area as the all-time COP, just coincides occasionally. So if you take a look at the all-time gold market, here's a yearly chart, guys, of the gold market. You could see that market has completed yearly COP target. This is really big scale, and even minor reaction on the COP could trigger more or less significant pullback, if of course it will happen. But existence of the 2160 COP on all-time chart stands in favor of some downside reaction, as it accompanied with the patterns that we have on the weekly chart. That's why my personal view currently is focused on this thrusting action. All this stuff is creating the picture, including this rally, that it seems that the best way for now is to wait for some Jordan Apple pattern. Most probable it will be bread and butter buy. So taking it all together, I suggest that 2150 area now stands in focus. We could just watching for a pullback, which will be just the 30%, and weekly butterfly reaction on its target also suggests 30% pullback, which makes that 2115 area is the most probable that could be achieved with the pullback. And if this will happen, that will give us great bread and butter buy pattern on the daily chart. That's what I intend to keep an eye on. On intraday charts, unfortunately, currently we do not have anything. So because the bread and butter on the daily is the second step. The first step, we have to keep an eye on intraday charts and have to wait for clear bearish pattern to be formed first, because it could put the foundation, put the starting point for a possible retracement. But for now, as you can see, we have nothing. We have even minor grabber that suggests that previous top might be revisited the next week, retested next week. So as a conclusion, we could say that currently we're not considering any short position. For our first step is to wait for a clear bearish pattern on the hourly chart. Once it will be formed, scalp traders, if you trade on intraday charts, you could think about taking scalp short position. But for trading on the daily chart, we are coming to the second step, is waiting for a pullback, supposedly to the 2115 area, where we could get nice opportunity for taking the long position. That in two words that I intend to keep an eye on next week. How this scenario will be realized, we will see. But we will get CPI numbers. Chance exists that might be pullback if these numbers will be stronger than expected. So let's see.